Recently, Russia suspended trading in US dollars and euros on its leading financial marketplace, the Moscow Exchange, after the new sanctions imposed by the Biden administration on Russian financial institutions aimed at hindering Russia's ability to wage war in Ukraine. However, it seems these sanctions are going to harm the US dollar. The US Treasury Department on Wednesday widened sanctions against Russia aimed at cutting the flow of money and goods to Moscow as it continues to wage war on neighboring Ukraine. The sanctions targeted more than 300 entities, including those in Russia and countries like China, Turkey, and United Arab Emirates. Before I proceed, I encourage you to consider liking the video and don't forget to share your views on the topic in the comment section below. Your feedback is invaluable for us and a wider audience around the world. US restrictions aimed at further isolating Moscow from the international financial system over its war in Ukraine. The UK followed the US with similar sanctions on the Moscow Exchange. Vladimir Putin has approved a series of measures to further attract capital through the Moscow Exchange from both Russian and non-Russian persons from friendly countries, the US Treasury Department said in its announcement of the new sanctions that it said has provided opportunities for the both Russians and non-Russians to profit from the Kremlin's war machine by making investments in Russian sovereign debt, Russian corporations, and leading Russian defense entities. The Russian retaliation came within an hour of Washington's announcing a new round of sanctions aimed at cutting the flow of money and goods to sustain Russia's war in Ukraine. The Central Bank of Russia said, due to the introduction of restrictive measures by the United States against the Moscow Exchange Group, exchange trading and settlements of deliverable instruments in US dollars and euros are suspended. In easy terms, it means banks, companies, and investors will no longer be able to trade US dollar and euro currencies via a central exchange, which offers advantages in terms of liquidity, clearing, and oversight. Instead, they will have to trade over the counter or off-exchange trading, where trading is done directly between two parties without supervision of an exchange. The central bank said it would use over-the-counter data to set official exchange rates. However, central bank added companies and individuals can continue to buy and sell US dollars and euros through Russian banks. All funds in US dollars and euros in the accounts and deposits of citizens and companies remain safe, it said. With Moscow pursuing closer trade and political ties with Beijing, China's yuan has ousted the dollar to become Russia's most traded currency, accounting for 53.6% of all foreign currency traded in May 2024. Dollar-rouble trading volume on the Moscow Exchange tends to be around 1 billion rubles, which means 11 million US dollars a day or 4 billion US dollar in a year. Euro-rouble trading hovers at around 300 million rubles daily, and yuan-rouble trading daily volumes reached to 8 billion rubles. According to London Stock Exchange Group data, the US Treasury said it was targeting the architecture of Russia's financial system, which has been reoriented to facilitate investment into its defense industry and acquisition of goods needed to further its aggression against Ukraine. However, Russia's central bank has been bracing for such sanctions for around 2 years. The central bank had been preparing for such an event since 2022. In July 2022, the bank said it was modeling various sanctions scenarios with forex market participants and infrastructure organizations. Forbes, Russia had reported in 2022 that central bank was discussing a mechanism for managing the ruble-dollar exchange rate should exchange trading be halted in the event of sanctions against Moscow Exchange and its National Clearing Center, which was also hit by the new sanctions. Yevgeny Kogan, an investment banker and professor at Russia's Higher School of Economics, urged people against panicking. You know, it's genetic for us. If we are scared, we run to buy currency, and it doesn't matter whether it's 100, 120 or 150. You must not rush. He warned people on Telegram, saying things could get very serious if people ignored the advice. The new sanctions will take full effect on August 13, 2024. Companies and individuals in Russia will still be able to buy and sell euros and dollars through lenders, and the Russian central bank assured that all deposits in foreign currencies would not be impacted. But the question is, will new sanctions affect the Russian economy or backfire? Will the US dollar be affected, or is it one more step for de-dollarization? While the US sanctions against the Moscow exchange will complicate currency transactions, experts say they will have a limited impact on the ruble's exchange rate. The chief economist at T-Bank Investments, Sofia Donets, said, "We do not expect a significant effect on the ruble-dollar exchange rate, so our forecast for the rest of the year remains in the range of 90 to 95 rubles per US dollar." She added, "The new package of sanctions once again reminds us that the sanctions regime continues to evolve, increasing the risk of investing in alternative currencies and jurisdictions for Russians." However, some experts say the ruble will see greater volatility following the US sanctions. Bloomberg's chief economist for Russia, Alexander Isakov, said sanctions will affect the exchange rate only secondarily, to the extent that they make the ruble more volatile and therefore either increase the neutral ruble rate or the equilibrium ratio of capital outflow of GDP. He added, sanctions on the Moscow exchange will reduce competition in the currency conversion market, allowing banks to expand spreads against customers. For companies in Russia, it can make an increasingly difficult business environment. However, top executives at several metals producers said they don't expect the sanctions to impact the actual commodities sales, but costs to convert foreign currency will rise. An executive at a fertilizer maker said the company is not worried about the end of the ruble-dollar exchange trading, but rather worried about technology sanctions. Russia's energy giant Gazprom hasn't used the Moscow exchange for settlements for a long time. Evgeny Kogan, a professor at Moscow's Higher School of Economics, said banks will definitely not lose in this situation. Rather, their income will only increase due to the expansion of spreads and commissions on over-the-counter transactions. Kogan added, most problems will be solved one way or another. The main thing is not to commit rash and emotional actions today. It's now clear that the ban on the US dollar and euro trading in the Moscow exchange will definitely impact the dollar directly, because a lot of the currency will be out of the market, and it's a sign of de-dollarization. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.